Good morning. It's October the 21st, 2015. Time to kick off another trading day. And we're going to come into the market today with no news on tap in the United States. They're looking for a build of 3.5 million barrels in crude oil. You'd expect that to take the crude oil market lower, but it should have very, very little impact on treasuries and on equities. Japan's export numbers were below the forecast, and that was not a friendly forecast anyway. China's corporate profits are down 8.7% this quarter, and that bad news was taken as good news for equities. Buy stocks because the People's Bank of China, the Bank of Japan, the European Central Bank, Bank of England, Bank of Canada, and the rest of G20 will all have to support the markets, buy stocks. That paradigm has worked since March of 2007, and as long as it continues to work, traders' money will go to the long side of the market. So what's interesting today as we open is that we're up off the lows, but we really haven't come in and challenged resistance at 28, and resistance starts at 24. So our first sell is going to be 23 to 27, sell 1, and sell 2 is going to be 31 to 03. If the E-mini rallies today, I imagine treasuries will be pressured but won't break. This is option expiration week, and the 10-year is setting up for a close at 28.16. The call action is at 29, the put action is at 28, and a close in the middle is usually the way that's resolved. Support is 12 to 16 as we start out, so our first buy is 13 to 17, then 5 to 9. And I think, again, as long as the market stays below this volume number at 27, it can sell. We're dealing with a B and a couple of Bs before that, so the market is set up to sell. Okay, the knob spread expanded overnight. As the treasuries rallied, it's come off a little bit. You can see it's had a high of 08 this morning when I came in. I wrote it down at 06, so it is coming in a bit, and that would make the short of choice the 30-year, not the 10-year. If the markets do sell, the selling will be concentrated in the 30-year, not the 10-year. Okay, we have 26, we've got 27, then we got the high at 01, so 27 to 31, sell 1. With this T rotation at 3, we got an S high at 10, 7 to 11, sell 2. The buy side, we have the London low at 17, we're at 23 right now. We had the breakout at 20. I'm going to go for a little deeper, so we'll play for 13 to 17, but it might take a 21 to get in. A lot of it we're dependent upon what the E-mini is going to do. And then we'll go 1 to 5. Pick up this low over here. Now, as you get into the methodology and the template that we use to assess market activity and whether we want to be buyers or sellers, your eye will be able to come in and pick this stuff up pretty quickly. I've worked with people privately, and over 2 to 3 weeks they're able to make the same calls that I am. So what I would like you to do is, when you come in and you do your homework and your analysis, pick out your levels, compare them to mine, pick out your buy and sell spots, compare them to mine, and in less than a month we'll all be on the same page. And this discrimination, this ability to read the market, the contextual aspects of the market is what we're going to work on and get you better at, so you can make the calls yourself. Our objective is to develop you as an independent trader where you can stand on your own two legs. And we see that by the fact that about 2/3 of our room show up for the morning briefing, then they disappear and go do their own thing because they're tired of hearing about retest failures, S&B trades, exhaustion bar trades, etc. Okay, we came in last night wanting to sell basically against 80. We had a 79.81 sell. The high is 79. That looks pretty good right now. Again, don't think this market can break because of what in the hell is going on in the world these days, and it's not very comforting. When you see the debt ceiling will be raised, that'll be John Boehner's last act. You know, people, they scream about the default and all this money that we have, but they don't scream about the process that makes the budget deficit grow year in and year out. I mean, that's just kind of, we're going to spend more money. And if we don't have it through taxes, we're going to print it. We're going to borrow it. And if we can't borrow it, we're going to print it. But at some point, you know, that game is over. And if you doubt me, take a look at Ecuador, take a look at Venezuela, take a look at Argentina since the 1930s. It all comes home to roost, and that's the situation we're creating for ourselves. So it's pretty easy to balance the budget if you don't allow spending. You just put a cap on everything, and if you get rid of government workers as they retire, you could bring it under control pretty quickly. But no one has the political will to do that. These guys get voted by giving money to constituents for votes and or campaign contributions. You've got a high volume number at 73. 75 is a round number. We rejected prices below 75. So 73, 75 is buy 1. 71, 69 is buy 2. And expect gold to stay in a trading range and test resistance today. We're looking at a P in the overnight. One of the benefits you get from this room is you really do come to appreciate and understand the short side of the market. And 2/3 of our economy, and probably even less than that if you take government out of the picture. The government, these people are immune. They can't be touched. Their salaries go up, their retirement go up, can't be fired. And government right now takes, from the city to the federal level, takes about 40% of our GDP. That's why all these crony capitalists are in bed with governments. And you can't ignore that many dollars. And but we can prosper in economic contraction and downtimes, and most of the private sector can't, outside of those that service the government. Okay, looking at the euro, so I'm just saying you're getting the tools that you need to prosper. You're going to learn how to go short. You're going to learn how to button up. You're going to learn how to hedge your portfolios, and that gives you a great sense of comfort. Okay, here is the euro. I think it's on hold today. 75 plus sell, 50 minus buy. We're sitting here. We're looking at a B. The European Central Bank meets tomorrow, so I don't expect anything to change. They don't have to change anything. They keep it steady as it goes. So we're going to have sell 1, 75 to 85, sell 2, 14 to 14.10. On the buy side, we're going to have buy 1, 40 to 50. And then 15 to 25. And they might go for stops outside either end of the either side of the Globex, but I don't think the market's going to break. Okay, crude's got some bad news coming today, but it is expected. Build of 3.5 million barrels. Well, the first article I put up this morning, and we don't know if it's true or not. The financial press turns on a dime. Everything's bearish, everything's bullish. There's no in between. And the articles on the U.S. crude production, which is falling right now, have been just-in-time inventories have come to our crude oil production. There's a lot of production out there that's being sidelined right now, or being shut in. And we can ramp it up any time. If we concede the battle to OPEC, and we will, we're going to continue to send our dollars. And to give you the magnitude of that, over the last year, OPEC revenues have fallen by $370 billion. That's a lot of money for bombs and terrorists and autocratic forms of government, and for instilling that philosophy and spreading it around the world. And that's the Saudis' deal with the devil, which is the Wahhabi sect that has caused all this grief. They are the ones that foment and are the basis for all this expansion and using terror to achieve their expansionist goals. So here we are in crude. I think we're going for stops below 45. We haven't gotten there yet. So 45 and a quarter will be buy one. That allowed to get stops below that, and then 44.50, 44.25 for buy two. A build of 3.5 million barrels is not bullish news. The London high is 82. So our 45.75 to 46 is sell one. And then 46 and a quarter, 46.50, sell two, picking up this area right over in here. From yesterday's, where the selling started in F period. Okay, the question for today is, will the E-mini rally or not? Can we get through that 2032 and trade higher? If we do, the next stop really is the 2039, 2045 area. And I think everything will resolve on that. The economic news is not supportive, and it hasn't been. Buy stocks. And what we can see right here, if we just look at this, is that we got volume is moving higher through these distributions. And it's higher in the overnight system, too. So everything is still pointed up, and I think the trade's from the long side. So we got this single print at 27, and they have made us pay up on the opening. So we've got an R low at 24.5. We've got a Q low at 23. We've got 20.50. So this 20 to 25 area is pretty good support. So 20 to 25 will be buy one, and we'll put a question mark at 27. If we come back down and we can't take out this 27 area, we need to be long to retest the 32 to 34 area. First sell band is 32 to 35, then 39 to 44. And there is no strong fundamental economic news to take us higher. It's just the Fed, central banks around the globe have to support the markets, buy stocks. So 10 to 15 is buy two, 20 to 25 is buy one, with a question mark at 27, and 32 to 35 is sell one, 39 to 44 is sell two. Again, the easiest trade to see is failure to take out 34.50. I mean, it is resistance. If resistance holds, sell it. Don't give me a well, duh. But keep it simple. The market really runs and operates on principles that are just that well defined. If resistance holds, sell it. If support holds, buy it. Okay, that's what they do. And we complicate the issue because we can. It'll take a while to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.